Welcome to Brokers Digest, a weekly webcast by The Edge Singapore, where we discover stock opportunities with you. This episode is made possible by TD Ameritrade Singapore.
Welcome to our Brokers Digest live webcast series with guest speaker Chris Brankin, CEO of TD Ameritrade Singapore. Hi, Chris.
Hi, Gula. How are you today?
Yeah,
Thanks
I'm
for
good.
having me on.
Okay. Last Tuesday, we discussed the possible rotation from tech stocks to cyclicals, which we'll come back to shortly. At present, there is still plenty of interest in tech stocks. So we're going to look into something that is proprietary to TD Ameritrade. It's the Investor Movement Index. So, Chris, could you tell us a little bit more about the Investor Movement Index and what it does and what it's telling us now?
Sure, happy to. So the Investor Movement Index, what we call the IMX, has been around for about 10 years in the U.S. And we recently, in the last year and a little bit, kind of broke out our Asian-based customers in terms of what they're buying and selling. So it looks at our overall population of about 13 million plus customers, and it's what they trade on a month-to-month basis. So if you make a trade, whether you buy or sell, and it goes all the way down to the granular level in terms of individual stocks, in terms of what we see our customer base buying and selling. And what's a really powerful tool about it is it not only just talks about the granular level, but it also shows trends from month to month, from quarter to quarter in terms of what we see our overall customer base buying and selling.
So what have those trends been like for the month of August and so far in September?
Yeah, look, I'm super bullish in terms of the last 3 months, in fact, have been 10% up. So 10% up means that our customers have been risk on. They have been buying at a larger clip. So they've been adding more net new buys over the last 3 months in a row at approximately 10% more from 1 month to the next. So June, July, and August, we've seen our customers being net, risk on bullish positions. So we do see a lot of similarities in terms of what our U.S. customers trade versus what our Asian-based customers trade, with some slight differences. So in fact, this month we saw our 3 biggest net buys from our Asian-based customers being Taiwan Semiconductor, NVIDIA, and Electrics. Now, this is not the same for our U.S.-based customers. What we see our U.S. and our Asian-based customers net buying together are the big tech names like Apple and Microsoft, and then we also see them participating with Tesla and Moderna.
Wow. So there must be people selling stuff as well. So what are we Asians selling in the U.S. market?
Yeah, I think some of this stuff is a little more Asian centric. So you have Sogu. It's the Chinese kind of search has been a net sold product. Delta Airlines. I'm surprised more of the airlines haven't been net sold. I mean, it's just not a whole lot of activity internationally in terms of where their profitability is coming from. We also see Revolve Group and U.S. Foods. Now, those are not as actively traded from our U.S. customer base, but we do see more selling pressure or net sold from our Asian-based clients. Now, the ones that we see everyone kind of selling, and it's not really a surprise, is you see Walt Disney Group, MGM Resorts, and Macy's. Macy's has really had a difficult year. They have leveraged, a lot of their kind of properties in order to kind of get through into 2021. Their stock has stabilized a little bit here in the last few weeks, but it has been tremendously under selling pressure for most of the year. Disney is an interesting one because if you look at it, even on our Thinkorswim trading platform, where you can look at a cash flow analysis, it tells you where stocks actually make the profitability in their stocks. 33%. So a third of Walt Disney makes their money from parks and hotels and all the buying and selling to do with the parks and hotels. Well, they've all been closed. So the stock has been under a little bit of selling pressure here just this last month because the stock has been up over the last 4 months, even without most of their parks even being operational at all. So it's definitely some things that I think to pay close attention to. And it is something that not only our investors at TD Ameritrade are doing, but also investors around the globe.
Okay. So Tesla was one of the net buys in your IMX, but it's come off its highs, but obviously still a lot of interest. Now, in terms of valuations, how does Tesla compare with, other stocks other companies that make electric vehicles? There's Nikola Motor, which was in a bit of it was struck by a short seller, Hindenburg Research, that claimed that its product video was, well, we better not say it on this show, its product video wasn't quite what it was meant to be. So could this drive even more interest into Tesla, or is it likely to are people likely to take money off the whole sector?
Well, I mean, Tesla, look, people that have been betting against Tesla for the last 4 months, well, they've either gone broke or lost a lot of money.
Okay.
A lot of this, we look at valuations. Look, their valuations are you can't really look at it from a PE ratio. It's more based on potential. But if you look over at the rest of the electric vehicle market, it's an interesting play. You have some of these big companies in China that have their electronic vehicles. We have GM. We have some of the big U.S. companies where they make way more cars than Tesla does on a cost per car basis. So at some point, I think that there might be some sector rotation or at least some profit taking on Tesla. I mean, especially if you were long from even $200 earlier this year, the market, it's gone up, 10 times that price. So we do see some selling pressure, and there is, some short-term choppiness caused by the news and just overall sentiment. And then on the flip side of that coin, is there some value to some of these e-car makers, stock prices that are just nowhere near the valuations that are getting from the likes of Tesla?
So based on your IMX, is there any interest in some of the Chinese electric vehicle stocks that listed on NASDAQ and NYSE this year? Well, we've had Li Auto recently. Then there's NIO and XPeng that were recently listed on NYSE. And just for info, XPeng has Alibaba and Xiaomi as investors. So should we follow them?
Well, definitely some heavyweights there. NIO, we did have as net new buys a couple of months ago from our Asian-based clients. We do see lots of interest. When I say that, so we get lots of queries around when these stocks are actually going to IPO. So what we do explain to people is that we trade products once they get on the secondary market. We're not an underwriting firm or an investment bank. And that's really important. It's just anyone out there that's looking to potentially, quote unquote, participate in an IPO. I mean, those things are generally difficult to participate in the IPO, meaning that you would have to have a long-term relationship with the syndication firm or the investment bank, and have a large portfolio to be able to participate with them. But once it gets on the secondary market, you can buy these products through TD Ameritrade. Now, important, some people believe that these IPOs come out and they think that they're maybe overvalued. Most times when an IPO just comes out, you cannot short sell the IPO for the first 30 days in a general sense. Just something to pay attention to. But we are getting interest around these e-car makers and in terms of where we're headed. But it's just a little bit too early to tell that, if in terms of that's going to be more of a longer term play.
Okay, so let's move on to another stock that's been net bought by all your investors in Asia and globally, and that's Moderna, because Moderna is one of those that has a vaccine candidate that's undergoing phase 2, phase 3 trials. And in October, Moderna is going to announce some of that interim data based on phase 3. There's some other stocks in the pharma sector. Merck is also going to be announcing whether one of its therapeutics is working or not, also in October. And Regeneron will also be announcing partial results of a phase 2, phase 3 antiviral antibody cocktail to treat and prevent COVID-19. Now, how closely watched are these announcements by investors? And will it have an impact on the broader market if there's a therapeutic?
Look, this is, to me, the most important thing going on in the markets right now. you have 165 plus, pharmaceutical companies that have some type of drug for vaccine or therapeutic in phase 2 or phase 3, stages of their, testing. Market has been very sentiment driven, and anytime that we get good news that, that a drug is past phase 2 and is on to phase 3 and is now into phase 3 testing, like these things have been seen as positive. We have seen our customers at TD Ameritrade been net new buyers of Moderna for the last few months. We've also seen a lot of activity on the net buyings for Pfizer. We've seen some activity more recently with Merck. But I think I've said this, to you previously. I've said it, many times. So goes the coronavirus, so goes the markets, and not just the stock market, but the economies and things that go with it. So the closer, that we can get to a therapeutic or some type of vaccine is really important to, just get us back on the track of, of acting or re-engaging our global economies.
Yes, back to normality, so to speak, if we ever get there. Yes. Okay, so we'll all look forward to that. Back to what we said at the beginning. Last Tuesday, we discussed whether some money could be taken off the table for tech stocks and whether there could be some rotation into maybe the cyclicals. And, we saw NASDAQ come off a little bit more and the SPX holding, the Standard & Poor's 500, holding its valuations and going up a little bit more. So is there likely to be more money rotating from tech into cyclicals and materials? There's materials, retails, banks, industrials, even energy. Well, what are your views on that?
Well, I think I think you hit it right on the head last week. I mean, at some point, where we've seen these stocks go up so much, whether you're looking at valuations or not, at some point people take some profits off the table. So we did see some profit taking. We did see some volatility increase where we saw the VIX increase almost, above 29, almost to 30. And all that was really around the tech space. So I think important to see where we see our customers potentially kind of dipping their toe in the water in terms of what other parts of the economy they think might benefit if we get to that next stage of COVID-19. So what we see some of our customers starting to actively buy is some of the large U.S. banks have been more net bought over the last couple of months as we look to rotate into some type of cyclical play. The second big area that we've seen some pent up demand, but is still underperforming at this point is the retail space. And I think there's all kinds of things that are impacting that right now. If we start to get some of that government stimulus back, we start to see some of that consumer have a little bit more confidence, whether that's around their jobs or, in terms of they're getting some type of, stimulus package, or they're confident that they're going to maintain their job. All those things I think will help in terms of the retail demand. We've never really had that back to school shopping surge that we normally get in the late summer in the U.S. and the back to work surge hasn't happened at all. So I think there is some pent up demand on the retail side. So that's what we see our customers kind of focusing, if they are rotating some of those dollars out of tech, is into the large U.S. banks, and into some of the retail plays. The one wild card that we look at, that we see a lot of activity, some buying and some selling at this point, is in the energy space. We've seen the oil markets under some tremendous pressure over the last kind of 2 weeks, which we've seen drag down the whole energy sector. Now, that is going to directly correlate with what happens in terms of, the coronavirus. If we start to see some good news around that, some therapeutics from some of the pharmaceuticals, and the impact for demand might come back up, that's going to, impact the energy market positively, and basically will bring back up some of these energy stocks that have been under tremendous pressure for most of 2020.
Okay, so we'll all be keeping an eye out on those October announcements with those phase 3 trials that the farmers have. Yeah. Yes, fingers crossed. Well, pray as well for those who are religious. Moderna, Merck, or Pfizer, all the rest of them. Regeneron, etc. Okay, so what we have to look out for next week, this week rather, on Tuesday and Wednesday in the US, and of course for us in Singapore on Thursday, is the all-important, FOMC meeting. Yeah? So we have to see what comes out of that, and we'll know that on Thursday. What are you expecting?
Well, I think there's some big news here towards the end of the week. We have the Fed, always kind of an interesting one for me because it's the last one before the U.S. elections. Historically, pretty quiet. Maybe people are looking at the tone in terms of going forward. Do they have the levers to pull in order to basically help stimulate some of the economy, especially, because of the stimulus packages have stalled at this point? So I think, maybe a little bit more importance to this Fed meeting than, maybe prior meetings before a U.S. election. We have the Philly Fed number coming out later in the week. We also have the Labor Department, start to kind of paint that picture in terms of, are we starting to get some of the manufacturing back online? Are jobs starting to trend more in the right direction? Or are we still, going to be, greatly impacted still by the COVID-19 period? So I think a lot of things on tap, for the latter part of this week. They're going to help kind of drive the overall sentiments of the market going for probably the next 2-3 weeks.
Okay, so we've also got housing starts coming on Thursday
absolutely.
as well, building permit, so on. Okay, so also the FOMC update will include the dot plot of the interest rate expectations, just to update everybody, plus projections for the economy into 2023. So that's really something to look out for, FOMC. Also, we'll be keeping an eye out on the VIX. Chris, you said that the VIX went up a lot, but it has receded. Yeah.
Yes.
So what do you think? What do you think would happen this week? Will it?
So we're historically so we're around that 26 level. So there is some uncertainty priced into the market. So you hear people say the VIX is this fear gauge in terms of the markets. Now we saw the VIX kind of getting back towards that 20 level after it spiked up from the late March, early April time period where the markets kind of imploded. Now, kind of went back almost to 30 here, last week as we saw markets sell off. So at this point, we're at this inflection point in the VIX. 26 is a pretty elevated number. So there's definitely a little bit of fear. There's a little bit of downside risk being priced into the market. So I think really important in terms of what we hear from the Fed, what we see with, from the Philly number, what we see from the housing starts, what we see from the Labor Department. And going back to what I said earlier, more importantly, what we start to see from these pharmaceutical companies as we head into October, where Merck and Moderna are supposed to be coming out with some announcements on their findings thus far.
Okay, so all eyes on the pharmaceutical sector for this week, for the next 4 weeks, I think, for the rest of the year. Okay, thanks. Okay, thank you for your inputs, Chris, and we'll speak to you next Monday, 21st September. It's goodbye from me in the studio, and it's goodbye from
me at home.
All right, see you next week.